The Nigerian equities market is resuming from the holidays on a positive note as the NGX All Share Index year-to-date return is at 11.2%. Gbolahan Ologunro, Research Analyst at Cordros Securities, joins me to discuss market drivers. Gbolahan, thank you so much for joining us. Always a pleasure to have you on the show. Year-to-date at 11.2%, that's not too shabby for just the first quarter of, well, going into the second quarter of the year. But what are your thoughts on what the key drivers have been for this market so far?
Yeah, good afternoon, Esther. Thank you for having me. Like you rightly mentioned, the equities market has had a spectacular start to the year with year-to-date returns in the region of 11%. And for us, we think this is broadly reflective of the fact that domestic investors are the dominant players in the market. And of course, that has enabled the Nigerian equities market to sort of divert from the bearish sentiment that affected emerging markets generally and during the quarter on the back of the tensions between Russia and Ukraine. But looking at the key drivers that have supported market performance since the start of the year, we think firstly, the fact that earnings for 2021 full year surprised to the upside. We didn't see so much of negative surprises from corporates across board. So that also lifted investors' appetite for stocks. And with the Q1 2022 earnings season expected to kick off on the tail end of this week going into next week, I think investors are also beginning to position in stocks with attractive dividend yields and sound fundamentals. So in the banking space, last week we saw renewed interest in the shares of Zenith and GTCO as their yields were at around 13% level. So investors found yields at those levels at very attractive entry points that drove bargain hunting in their share prices. In the cement space as well, we have seen resilience in the share price of Dangote Cement following the improved dividends that the company declared for full year 2021. They declared about 20 naira compared to about 16 naira in the prior year. And if you also go further into the telecommunication sector as well, investors have taken a good look at MTN, more so that the company also obtained final approval from the central bank regarding the payment service bank license that the company applied for. So investors are also optimistic that MTN still remains a good stock in the market. And with the recent approval from the central bank, that will certainly provide another support for expansion in top line in the medium to long term. And for us, looking at MTN, we are quite optimistic about the potentials of that payment service bank business, particularly when you consider that MTN is the market leader in the Nigerian market with subscriber base of about 68 million. If you take into account the fact that adult population that are still excluded from financial services are about 38.1 million, we think that will enable the company to sort of deploy agents in rural areas in order to improve financial inclusion across the country. So that is a positive event that we are pleased about, and so far so good. Since the announcement from central bank, we have seen investors repricing the shares of MTN in anticipation of improved contribution from that payment service bank business to the company's earnings.
Okay, if I could just come in here. Now, between large cap stocks and mid caps, which of these two have investors seen the most value, whether from a fundamentals point of view, from an earnings, from a dividend yield point of view, or from a valuation point of view? What have you seen so far?
Yeah, so far, we think it has been concentrated more in those large cap heavyweight stocks across board. So if you look at the cement space, Dangote Cement has been the key driver of performance of the industrial goods index. If you also look at the telecommunications industry as well, MTN has been a key performer. The share price of Airtel Africa has been somewhat static since the start of the year. We've not seen so much of upside movement compared to MTN, and that's because for last year, Airtel Africa was exploited, by foreign investors in exiting the Nigerian economy. But given that the implied loss on Airtel Africa, if you are to buy on the Nigerian market today to sell on the London Stock Exchange, given that there is an implied loss on that transaction, we've not seen so much of buying interest from foreign investors. If you also move over to the banking space, the big names in that space, Zenith, GTCO, Access, UBA, these are stocks that have supported the banking index. So far, so we think it's been more of those heavyweights across sectors.
Okay.
If we look at the oil and gas sector as well, Seplat has also been, a key stock in this space that has supported the performance of the oil and gas index when you consider the uptick of oil prices in the international markets induced by the tensions between Russia and Ukraine, in addition to the acquisition of ExxonMobil oil and gas assets that the company also um, uh, um, the company also announced a couple of months ago. So, across board, it's been more of those large cap stocks supporting a market performance in the equities market.
Now, I wanted to also, I don't think you and I have ever talked about penny stocks. I know that that's probably maybe far-fetched or far off at a time like this. But I know that back in the day, investors did invest in penny stocks, companies that, they could grow with, and, just monitor and just, where in which they forecast, good performances going forward. Is that even a conversation? Is that on the table for investors these days?
Yeah, certainly. We think investors are also taking a look at, some stocks you regard as penny stocks, but now probably classify them as mid-cap stocks. If you look at a stock like United Capital, that company was able to increase dividend by over 100%, declaring about 150 crores. So, this stocks with sort of very attractive dividend yields, investors are taking a good look at them. In order to reprice those stocks from their current market prices. So we still think that if investors still decide to take their eyes away from those usual suspects across sectors, there are still some penny stocks that are still capable of delivering decent earnings. They have, sound fundamentals and attractive dividend policy as well. United Capital is one of those companies. If you also look at Africa Prudential as well, that is also another penny stock with attractive dividend yield and of course decent earnings in the last 2 to 3 years. So there are still some few companies across board that investors can still cherry pick when they are looking for attractive dividend yields and sound fundamentals.